Welcome back to the Startup Operator Weekly Roundup. The Weekly Roundup is the show for people who want to stay updated with major developments of the Indian startup ecosystem. If you're new to the podcast, please do subscribe and share it with folks you think will enjoy the show. Today, Roshan and I will talk about ShareChat's nearly $300 million fundraise from Google, Slice raising $50 million, and then in the EV space, we have Jio-bp, MG Motor, and Castrol Inc. sign a partnership to bolster EV adoption in India. Mensa Brands, within its first 12 months, has netted a 1,500 crore rupees revenue, and Navi has raised 300 crore rupees from bonds that were subscribed 1.4 times. Now, compared to how we started off May, June has been really eventful, haven't it, Roshan?
Yeah, it's been pretty eventful, I would say, last week. Although, I hear a lot of news around, startups laying off a lot of people. We discussed it last week as well. According to reports, anywhere between around 4,000 to 9,000 people have been laid off. This is on a base of maybe around 6 lakh employees that startups hire. I feel that the media is also being a little harsh about it. IT services folks fire anywhere between 50K to a lakh people every year for underperformance and whatnot, right? And they seem to manage the media pretty well. Of course, it's on a larger base, but still, and we've seen, how the startup ecosystem has come together to sort of offer solutions for the people that were unfortunately let go as well, right? A lot of people pretty much on any post, if you say, hey, I was laid off, there are a lot of people reaching out saying, please apply to our company and so on, right? So yeah, it's something that is unfortunate. Also begs the question, whoever thought that if you are going to get paid, I don't know, 40, 50 or 100% premium over what you were getting right now, whoever thought that would be sustainable? Not to blame the people who kind of opted for these kind of jobs. It's a frothy market. Everyone tries to make the best of the situation, but still, it just goes to show that these things are not sustainable, right? You have to sort of live with the consequences of this. In any case, if you've been let go, please feel free to apply to Vimo, right? We're hiring for variety of roles: sales, product marketing, support, you name it. Reach out to Gunjan or I on on social media, and we're happy to put you through to opportunities at Vimo. But yeah, pretty sad on that front. But did you watch Top Gun Maverick, by the way?
There are hardly any tickets available in Bangalore.
Dude, it's such a killer movie. That the previous movie was made almost 35 years back. I
I think
remember
in
watching it.
1986 or something.
Yeah, the year I was born. So I remember watching Top Gun on HBO. I think it used to come multiple times, right? Pretty regularly. What a fantastic movie. And yeah, watching it in the theater brought back a rush of memories. And Tom Cruise is so bloody amazing, man. He hasn't aged. I don't know. He hasn't aged at all in 35 years, I should say. Such a satisfying movie. Amazing action, amazing plot, everything. So definitely go watch that movie for sure. And yeah, I got my precautionary dose of the vaccine today, and I was just saying this to my wife that, what an amazing time. If you told me about a couple of years back that we would have a vaccine, I wouldn't have believed it, because vaccine development takes years, right? I think the previous record was around 6 years or something. Right, but what an amazing time to live in, where people have come together and we developed the vaccine in about 6 7 months time, or probably even lesser, right? So yeah, I guess it's a matter of perspective, seeing the brighter side of things.
Yep. Also, last week, I think after close to 14 years after when Sheryl Sandberg joined Facebook, she has now moved on from a role as chief operating officer at Meta. But one thing, like, of course, many people have come and spoken about, like, what would it is like to work with Sheryl. But something which I was thinking about when I was reading about the news was that during her tenure, Facebook went through multiple upheavals. There was the entire Cambridge Analytica scam. There was the Eduardo Saverin fallout happening, and then even most recently, all of these, controversies against the elections, right? How they were manipulating the results, or how they are not curbing hate speech in return for profits. She had been able to ride through all of those upheavals, and it really sets a strong precedence for how much women in tech has actually come forward over the last few years. I think it is really remarkable.
Yeah, she's somewhat of a legend, right? Being chief operating officer of Facebook, seeing through the IPO, and then plenty of other things that you mentioned, right? The Cambridge Analytica scandal, and then ever since what has happened. Yeah, she is definitely a legend. I didn't quite like the way that some of the articles alluded that, she was using company resources for her own personal work and everything. I think that's all a little bit of smoke and mirrors. So yeah, I mean, that's pretty unfortunate, I would say, right? But yeah, amazing legendary career, I would say, right? And I often say this to people, I mean, Facebook is what, I mean, I think around 16, 17 years old, maybe founded in 2004, right? And Zuck was just a college kid when Facebook first came up, right? And he has since matured into this tech exec 16 or 17 years later, one of the most important ones alive today, right? And the entire Facebook team has kind of handled the responsibility that they had as best as anyone could possibly have. Really, for all the buddhijivis who say that Facebook could have done X, Y, or Z things and could have been this or that. Really, I mean, you think about having about 2 billion users on the platform, having the ability to influence all of these people and do a better job, right? I mean, some of us are still trying to influence our houses and apartment societies and not getting too far. So it requires a little bit of perspective again. Yeah, I mean, all the best to Miss Sandberg for whatever she has coming up.
Right. Okay, talking about social media, right? I think we are seeing a very large check size after quite some time. This is Mohalla Tech, which is the parent company of ShareChat. They raised $300 million from Google, Times Group, and Singapore's Temasek Holding. Now, earlier this year, Times Group's video platform MX Takatak joined with Mohalla Tech's Moj platform, which created India's largest short video platforms. And applications like these got immensely popular in India in 2020 when Prime Minister Modi, in one of his addresses, announced that Chinese apps are being banned, which included TikTok. And interestingly, right, even Twitter has a stake in Mohalla Tech. So now, if the bid for Elon Musk by Twitter goes through, then he will potentially have a stake of 6 to 8% in ShareChat. Not only is this a large size check which you're seeing, which kind of maybe hinting towards upliftment in the market, but this also demonstrates that how much short video industry and that too in regional content is gaining popularity in India.
Yeah, for sure. I mean, ShareChat, I think between their parent app and Moj has more than 300 million users, and that's pretty significant, right? If you look at 600 million internet users at this point of time, growing to about 900 million by 2025, there's still a lot of growth that's left. You often compare the China market with India market in terms of how much of headroom some of these apps can really have, right? So yeah, I mean, there's still a long way to go for ShareChat, I would say, right? And which is what the growth stage of financing is about. The fact that they've been able to raise such a large check size in the middle of what seems to be a slowdown, right, is really something, I would say, right? And some of the monetization experiments and so on of some of these apps have been working well as well, right? I mean, we've spoken about Pratilipi, about Kuku FM, Stage, and so on, right? India is often called the DAO market, right, and not the ARPU market. But we may be at the very beginning of that monetization revolution, right, where people might dole out cash for things like this. I mean, I think also us urban kids have this bias. I mean, we feel that people on the hinterlands, people in rural India don't really pay, right? I mean, you only have to go and look at some of the weddings, I would say, right, that happen in these areas to get a fair idea of how much they can pay for things that they believe in. So I feel like that monetization experiment has to work, for them to sort of justify the valuation and going forward in terms of growth and everything. But yeah, I mean, definitely in terms of entertainment content for vernacular, there's still miles to go, I would say.
Right. Also, last week, Slice has raised a $50 million Series C round, which was led by Tiger Global. And with this new financing, it looks to scale its recently launched UPI payments products and also to make its core credit business profitable. Slice really shot up into so to call fame, and now it's issuing close to 3 lakhs to 4 lakhs cards a month. And this makes it one of the fastest growing credit card companies in the entire South Asian market. But again, as I said, this entire phenomenon of buy now, pay later, BNPL, right? The space which Slice, then Postpay, all of these companies operate in. Do you think it was more of a COVID phenomenon that companies like these or BNPL became popularized? Or is this like where the financial markets were heading to? And the reason I'm asking this because I'm a Slice user, right? And when I was trying to pay off my card payment for this month, I saw that they have removed the credit interest free period of 3 months, right? They've removed it, right? And now the interest which is being charged is like upwards of, I think, 36%.
Wow.
So, what do you think is happening behind the scenes over here?
36% is huge. So that's shocking, actually. I think, I mean, buy now, pay later is definitely something that's popular in the more developed economies, right? I mean, if you look at the West, for example, they have a BNPL for almost everything as a segment that is popular, right? And it's something that I don't think of it as a COVID phenomena. I think that there is a segment that is definitely lucrative for BNPL, I would say. Although, I mean, Slice has moved way past that, right? I mean, they might have started in the BNPL segment, but then they moved to cards. Bezos used to have this quote saying, "Your margin is my opportunity," right? And I would say, with respect to any kind of fintech disruption, the fintechs are telling the banks that your shitty service is my opportunity. Now, if you look at traditionally who banks sell cards to, right? I mean, it's people like me who already have two or three cards in the first place. Now, quoting someone like me, I mean, it'll require a lot from the bank, right? I mean, it'll require a lot. You probably have to give me like 6 or 8 airport lounges a quarter in the beginning, just to begin with, right? And I'm not even like an experienced credit card user. I mean, I just use it for some purchases. I know that there are some pro level folks who have saved travel costs and who get like amazing accommodation in Taj properties and so on and so forth, right? Now that is the level up to which some of these folks have to stretch in order to service the clients like me, right? But on the other hand, I mean, if you have people, I don't know, I mean, in their early 20s or even perhaps younger, they don't have that many options to begin with, right? Not a lot of banks are really like bending over backwards to service these folks. And also, I mean, these folks are used to a completely different customer experience. They're not the generation that stood in queues or spoke to tellers and filled out forms and so on, right? I mean, they are the one click generation. You order something on Amazon, you book a cab on Uber, and so on, right? So servicing these folks, I mean, is definitely an opportunity, and that is where Slice is coming in right now. I thought they had about 13 million customers, could be more now, and they also have some interesting merchant tie-ups as well, merchant partnership, and this is definitely a segment that has a lot going for it, but I do feel that all of these lending businesses, because these are essentially lending financing businesses, a lot of it depends on collections, and collections is lagging always, right? And I would love to see some of the numbers, because again, credit profiling, risk, all of these are very, very complicated, right? And it's not a slice and dice 'em, no pun intended, kind of business. So let's see how this goes.
All right, in the EV sector, I mean, this was good to see that MG Motors, Castrol India, and Jio-bp have signed a partnership to explore mobility solutions for electric cars in the country. Now, under this new partnership, they'll be setting up EV charging infrastructure for both four wheelers and two wheelers, and also expand Castrol's existing auto service network. Now, they aim to set up EV charging and service infrastructure in the entire country, and the main goal for this is going to be intercity travel.
Yeah. No, this is fantastic. I mean, incumbents investing in the EV ecosystem at this point is super important, right? Because one thing that we've often said is there are a lot of unknowns still, right? Which is the cost of ownership, what it requires in terms of maintenance and service, the charging infrastructure, and so on, right? And any kind of investments in this regard is going to be really helpful. And if you look at these, right, Castrol, for example, I think it has 20-25% of the market share in India for lubricants. They also have these auto service centers and so on, right? Now these are, I mean, it's as incumbent as incumbents can be, right? I mean, if these folks are actually taking a lead in something like EV, that's a very promising sign, I would say. I mean, it's very forward thinking, I would say. And also, I mean, early in the curve, right, a lot of innovation is cheaper to buy, especially for investors, because again, a lot of things are still developing in the ecosystem, so you can buy a lot of value for cheap, I would say, right? So and that's also something that some of these folks are looking at, right, to get a head start in this space. So yeah, definitely interesting development, I would say.
Yep. All right. Now moving on to our next piece of news. This is about Mensa Brands, right? And Mensa Brands is a startup which owns and operates an umbrella of D2C companies. They have netted a revenue of close to 1,500 crore rupees within just 12 months of its operations that ended in May this year. Now, they work very closely with founding teams of other brands to accelerate their growth on marketplaces, which includes managing product pricing, marketing, distribution, and brand building. They acquired a controlling stake in these small D2C brands, providing it direct control to operations, expansions, and strategy. In this past 12 months, Mensa has acquired almost 20 brands in the fashion, beauty, and lifestyle space. And majority of these companies have grown more than 80%. And this is kind of based on the model which is already there, and in fact, a very successful model that's already present in US, which is Thrasio. And today, Thrasio is now valued at over $10 billion. Now, that's definitely not a small number. So, do you think in India we'll see more holding companies like Mensa? That's
Yeah, definitely. I mean, you already have, 10 Club, Global Bees, Upscaleo, bunch of others, right? And I think even the more successful D2C brands like, Boat, for example, will become some kind of a holding company at the end. And what they're offering to these founders is funding, financing, and strategic partnership as well, right? Now, this playing the whole marketplace game, whether it's on Flipkart or Amazon, requires a lot of data, requires a lot of skill, and, scaling a D2C business, which is, moving physical stuff, is really challenging. It's not a software business, right, that you can scale very easily. So knowledge of supply chain, knowledge of brand building, and things like that is super critical, right? And Mensa does have that, the DNA, right, basically. So you've seen how e-commerce has grown post COVID as well. Amazon has a Sambhav fund where they have 250 million set aside for SMEs. A lot of the larger folks also will get involved, right? The HULs and the Maricos of the world will get involved in this anyway. So yeah, I mean, this is definitely a viable business, and the performance of Mensa kind of shows that, right? So yeah.
Yep. Next up, we have Sachin Bansal led Navi FinServe non convertible debentures based issue of rupees 300 crores has been subscribed 1.4 times to date. Now, debt funding is the process by which an investor or a VC firm lends money to an entrepreneur for a certain period of time at a given rate of interest, which is, of course, agreed by both the parties. And in return for that, company bond is issued to the investor, which acts as a certificate of the loan. And in the budget of 2022, our finance minister, Mrs. Nirmala Sitaraman, has also announced that the government is extending the timeline up to 10 years for startups to convert debt investments made in a company into equity shares. Equity represents an inherent risk, which means that returns are not available till there is a significant appreciation of the net worth of the company. Now, what this means is that till such a time that the company does not become profitable, the investors cannot sell the shares. Now, we have seen that the pace of funding and the rate at which it has been declining. So, do you think debt rounds or any other financing rounds would make sense for a startup at this point in time?
Yeah, for sure. I mean, there are plenty of other routes that startups can take. I mean, if they have healthy cash flows, actually, debt is a very good idea, rather than giving up equity. And Navi, I think, is doing what, 300 crores something revenue, right? They seem to be doing all right. They also recently, their bank license got rejected by RBI, right? Which is probably also why, I mean, they're kind of looking at the debt route, right? I mean, because their valuation might have been slightly affected by these kind of things. One thing is, go and look back at perhaps the Money Control article on Sachin, right? I mean, he did an interview with Chandra, and he talks about how he's a more mature entrepreneur the second time, right, compared to his previous stint with Flipkart earlier. So yeah, definitely. I mean, people are betting on Sachin, betting on the fact that he knows what it takes to build and scale a business in India. Plus the fact that I mean, financial services in India is such a huge white space, right? And Sachin has often kind of made said it that he wants to build a second HDFC, right, in the space. So that's why you see the debt round being oversubscribed.
Yep. Okay, and there are other couple of startups that raised funding last week. QMath, which is the math tutoring startup, has raised $57 million in a round led by AlphaWave Global at a valuation of $407 million. QMath operates in more than 70 countries and plans to increase this to over 100 countries by the end of FY 2023. Orange Health, which is a startup offering at home diagnostic services, has raised $25 million in a Series B funding round, which was led by General Catalyst and Bertelsmann India Investments. Now, they want to build India's fastest diagnostic lab. In space propulsion startup, Bellatrix Aerospace has concluded an $8 million funding round, which was led by BASF Venture Capital. Now, Bellatrix has backed contracts from ISRO and other undisclosed customers, right? And the space qualification testing is expected to be completed in the coming months. NutriFresh, which is an agri-tech based in Pune, is focusing on hydroponically grown produce, has raised $5 million in a pre-Series A funding round from a group of angel investors. Now, this funding will be used to scale up farm operations, implement complete traceability and transparency of produce, and of course, for marketing. Lastly, Mo Engage, which is a customer engagement platform, has raised $77 million in its Series E round, which was led by Goldman Sachs Asset Management and B Capital. This is Goldman Sachs Asset Management's first investment in an Indian SaaS company. Now, Roshan, we have been following Mo Engage for a while, right? And so, did you get to congratulate Ashwin yet?
Yeah, I mean, I'm going to be meeting him this week, hopefully. Yeah, what a story, man. MoEngage, they're a customer engagement platform. They have 1,200 customers in about 35 countries, and they've grown 100% year on year, consecutive years, right? So, phenomenal, phenomenal story. We talk about Indian SaaS, and MoEngage is, one of those shining lights, right? Fantastic stuff, really fantastic stuff for the entire team. And I think this race to $100 million, right? I mean, could be a reality in maybe 2 3 years time, right? You'll have a bunch of folks at the 100 million mark, and things will get a lot more exciting at that point. And MoEngage also competes with two other startups, right? I mean, Indian startups in the same space, CleverTap and WebEngage, right? And they seem to be doing really well as well. So yeah, we'll hopefully have Ravi, who's the founder of MoEngage, sometime on the podcast, talk about their story and stuff. QMath is again a very interesting business. They specialize in math tutoring for children. So I was reading a Indian Express report last week where they studied about 38 students in class 4 going to class 5 who missed 2 years of school due to the pandemic, and they just were doing a before after in terms of their math skills. And the result was pretty shocking. Stuff like division and subtraction and basic stuff, right? Basic arithmetic seems to be like challenging for these kids. I really hope that I mean, schools are back in full fray, right? I mean, they seem to be. Actually, a lot of schools have opened up, especially over the last couple of weeks, right? And yeah, we don't have any more disruptions, because I really feel in person teaching and coaching is way more effective, right? Yeah. And so QMath is certainly doing well in that regard. So this whole diagnostics, at home care is another sector that's very, very interesting. We've seen a bunch of folks, right, Medibuddy and so on, where you can just book these services online, and they'll come and deliver stuff at your house. So yeah, I mean, that is another very, very green space where a lot of solutions are going to be built. So yeah, overall, I mean, I would say, yeah, pretty secular in terms of the domains and stuff, right? So we did say that funding is slowing down, but I mean, you've seen some pretty large check sizes, right? 300 million, 77 million. Venture was always going to be about outsized returns from very, very, very few businesses, right? Not 100% of the businesses are VC investable. In fact, I feel the investable businesses are very, very, very small in number, right? So yeah, these times also, I mean, you will kind of see the wheat being separated from the chaff. You will see the real businesses kind of emerge at this point of time, right? And it becomes easier to kind of identify as well. So yeah, interesting.
So, last week on Twitter, this Elon Musk email was doing the rounds, right? The email which is sent to all its employees and leadership as well. Okay, hey, it's time to stop working from home and it's time to start working out of office. A very strongly written letter, I'd say, but what was your opinion on it?
I kind of was reminded of this debate about work from home. We had this whole mock debate of work from home versus work from office at Vimo, right? And one of the kids made a point that, look, I mean, if you were sending rockets to Mars, be working out of a home, right? And that kind of hits hard. And that's the kind of vision that Elon Musk has, right? I mean, SpaceX and Tesla and all of these companies that he's heading, they're doing some phenomenal cutting edge work, and that kind of work doesn't happen from a distance, right? I mean, you have to be very, very, very hands on. And also, I think this work from home has its limits, right? Definitely increases individual productivity to a certain degree, right? But if you're doing core science work, I mean, if you're doing highly collaborative stuff, and certainly at any rate, if you're launching rockets into the atmosphere, I mean, you can't do that from a distance. I mean, you have to be hands on, and you can't do these things kind of passively or dispassionately, right? I mean, there's a certain sense of being on the office floor, and he gives his own example, right? I mean, he worked from the office floor as well. So you're going to see a lot more of this from other CEOs and capitalists and founders and investors, right? Because I was listening to this podcast of Keith Boys by Harry Stebbings, right? A fantastic, fantastic podcast. We'll perhaps link to it in the description. It's a 20-minute VC is again a fantastic podcast that you guys have to check out. Where Keith is, famously he's the original contrarian, right? I mean, he's such a phenomenal guy, probably among the top 5 operator investor of the century, right? Great guy. And he was talking about the fact that now that the dry powder will kind of lessen, you will see less wokeism from Silicon Valley and from the West in general, right? From some of these companies, because I do feel that a lot of this very, very ultra liberal and ultra woke policies were sort of funded because of the froth that was there as well, right? Now, once the bottom line is in focus again, I think some of these things will be a little more tighter. So yeah, you're going to definitely see a larger correction on that regard, I would say.
In your upcoming conversation this week with Chaitanya Weekfit, maybe you can ask him this question, right? Their company has all of these wacky, ideas. Like one was this whole sleep internship where you're paid to go to sleep, and the one they announced, I think earlier this year, about the half an hour nap policy at office. So, yeah, but I mean, yeah, definitely do ask him this.
Yeah, no, I think it's genius marketing, if you ask me. I mean, it ties in with their brand perfectly, right? It's a mattress brand. You better know a thing or two about sleep, and how will you know if you don't sleep well yourself, right? So I think it was a good shtick. I mean, I won't call it a shtick. I mean, I think they're pretty serious about it. But lot to talk about in terms of the business itself. We've profiled more than a few D2C companies, right? Sleepy Owl, Mom's Company, Heads Up for Tails, True Elements, which in fact, I mean, they got acquired recently as well. So yeah, it'll be interesting to talk to Chaitanya about this space in which he's operating, and how they're kind of growing the business, how they're building brand distribution, all of those things. So it should make for a fascinating conversation.
Yep, absolutely. And folks, if you have any questions that you would want us to ask Chaitanya, do send them to us through our social channels. On Twitter, we are at Operator Startup, and on LinkedIn, it's called the Startup Operator. In the description, you'll also find our WhatsApp link through which you can subscribe for regular updates that'll be delivered straight into your WhatsApp inbox. At the end, if you enjoyed this show, do refer this to your operator friends and to others who you think will enjoy it. So this was all from the week that was. Roshan and I will see you again next week.
Thanks, guys. See you next week.